Hello, good morning, guys. Today we will complete internal reconstruction. Okay, so there are some entries. It is covered almost 14 marks in your May 2026 exam. So let us start this. If there is any entry regarding the increase or any reduction in value of asset, then what you have to use capital reduction account. Like in other chapter, you use a revaluation account. Same, you have to use a capital reduction account. If there is any increase, asset account debit to capital reduction account. If there is any decrease, capital reduction account debit to asset account. If there is any reduction in increase in liability, capital reduction account debit to liability. If any decrease, the liability account will be debited and capital reduction account. If there is any payment of reconstruction expenses important, you will do the mistakes. You don't have to write down the name of the expense. What you have to do, capital reduction account debit to bank account. And if there is any settlement of any contingent liability, like there is any what ICA will give you in the question, preference dividend in arrear or any capital commitment. If that contingent liability is there, no entry, because contingent liability will not be shown in the balance sheet. So if you are waiving it, that contingent liability, it is previously it is not in the balance sheet, and now it is already waived. But if you are paying any contingent liability, then you don't have to name that expense. You have to use capital reduction account debit to bank account to share capital account. Okay, like if you are paying from the equity share or preference share, or if you are paying in cash, then you have to use the word to bank account. You don't have to use that preference dividend account debit. You don't have to use this. Okay, if any losses or deferred revenue expenditures are appearing, then such amount should be written off even if question silent. If if there in your balance sheet, if there is any some word like deferred revenue expenditure in your asset side, if it is appearing in the balance sheet, even if the question is silent, like underwriting commission, discount on issue of debenture, preliminary expense, advertisement expense, suspense account, you have to write off them. Like how you write off capital reduction account debit to P&L account to deferred revenue expenditure account. This is the hidden adjustment. Okay, if any intangible asset appear in the balance sheet, if may be written by like patent, trademark, goodwill, copyright. Like at the time of writing off, what you have to do, capital reduction account to intangible asset account. Like, and you have to close the capital reduction account. How you will close? You have to use the capital reduction account. If there is any credit balance in the capital reduction account, because you have to make a working note like capital reduction account, debit side credit. If capital reduction account is credit balance, then what you have to use, capital reduction account debit to capital reserve account. If the capital reduction account balance is debit, what you have to use first, you have to use capital reserve account. If you have, then you have to use security premium account, then you have to use general reserve account, CSG. Okay, CNG. Okay, how you will remember CNG? CNG. Okay, CNAG, CSG to capital reduction account. Okay. Then, for if there is any, you have to increase share capital, then bank account debit to equity share capital account. If you are consolidation of shares, like there is a separate question IC will ask, if it is asking you in 5 mark or 6 mark entry, then it is a best part. If you are increasing any share capital, then bank account debit to equity share capital account. If you are consolidating any shares, then also equity share capital account debit to equity share capital account. It will be same. But what will change? This 10 to 100. And if you are like a subdivision of shares to equity share capital account to equity share capital 100, like now your shares will be 10. And if you are converting any shares into stock, then what will the equity share capital account debit to equity stock account? Okay, use remember this word, equity share capital account to equity stock account. And if you are converting stock into share, equity share stock account debit to equity share capital account. If there is any reduction of share capital, like if there is a liability of shareholder extinguished and it is reduced in respect of unpaid amount of shares held by them. For example, number of shares are 10,000, face value is 10, paid up value is 8, and this 10 reduced 10 per share into 8 per share, which is fully paid up. So you have to cancel the unpaid amount of 2 per share. Then what will be the entry? Equity share capital account, like or in balance sheet is reflecting 10, as 10 rupees. Now at what price? At what amount it will reflect? 80,000, 8 rupees. Okay, because rest 20,000 are unpaid in the balance sheet. If you are paying excess paid up share capital, like paid number of share 10,000 fees and paid up value 10, and pay off 2 per share to make it 8 per share fully paid up, then how you will do this? Equity share capital account debit 80. Previously, equity shareholder paid 1 lakh Now, in internal reconstruction, we are reducing it to 8 rupees. Like previously it is 10, now it is we are reducing to 8, and rest balance 2 rupees we are paying. So equity share capital account 80,000, it will reflect in balance sheet, and to bank account 20,000. Then if you are writing off the loss paid up capital, like if there is any loss paid up capital, then like number of shares is 1000, face value is 100, paid up value is 100. If you are writing off at 80 and paid up value is also 80, and the face value is 20, and here the face value is 100, so the paid up amount will be 20, and here also paid up amount will be 20. So equity share capital account debit 1 lakh to equity share capital account 20,000 to capital reduction 80,000. If to equity share capital account debit to capital reduction. If question does not specify if there is any reduction regarding the reduction in face value or paid up value, then you have to always assume change in face value and paid up value. Okay. Then most important, like it is already asked in Jan 26 exam, so it is like less important, but you have to solve at least 1 or 2 questions because it is like so confusing. Like at the time of surrender, what you have to do, the entry equity share capital account debit to share surrender account. Like you are sending your like 80% of share, then what you have to do, equity share capital account debit to share surrender. Like you don't have to reflect this in balance sheet. These are your share surrender. If the surrender shares are cancelled, if you are cancelling these shares as surrender shares, you are cancelling, then it is already credited. Then what you have to do at the time of cancellation, shares surrender account debit to capital reduction account. If surrender shares are utilized for the payment of any obligation, like you are paying to the like preference shareholder, equity shareholder, or to any regarding the loan, then share surrender account debit to share capital amount of like how much shares you are giving to for the payment of that obligation. Then this share surrender account debit to share capital the amount of shares you are paying. And if you are paying any liability, then liability account debit to capital reduction account. Okay. And some important adjustment while you are solving the entries, like if you will solve 14 marks question straightforwardly without any mistake, but after coming in the exam you will realize that I had done this correct entry, but by some like minor words to by you will confuse and you will wrong your answer, and you will score out of only 7 out of 14 marks. So I will cover all the entries, like important entries where you will do the mistake. If there is any preference shareholder or any equity shareholder, okay, if a preference shareholder writing of 2 rupees 75 each, it means how you will interpret it. 100 previously it is 100, now it is 75, 275. And if preference shareholder written off by 75 each, then you have what you have to interpret now. It share value is rupees 2500 minus 75. Okay. By 75, it means you have to minus all 75. Okay. If you have any paying of income tax liability, like this is given in the adjustment, you are paying in income tax liability of 3.2 lakh, and provision, this will be reflected in your balance sheet. Provision you have created, that is 2 lakh. You have to raise provision accordingly. So how you will create that difference of 1.2 lakh? Capital reduction account debit to provision for tax account 1.2 lakh. Director refunded the fees previously received by earlier. The company had paid the some fees to the director, but director is refunding that fees. So what you will do, the entry bank account debit to capital reduction account 50,000 50,000. You have to use the word capital reduction account, not the director's account. Any expenses paid for reconstruction, capital reduction account to bank account. The equity share capital cancelled. You in first or second entry you had cancelled some equity share. Now how you will utilize them? First, you have to write off debit balance in P&L account, like I have explained it. If there is any P&L balance or any underwriting commission and all, like okay, deferred one, and to write off 40,750 from value of plant and any balance received used to write off this balance word. You have to write down value of trademark and goodwill. Then how you'll do the entry? Capital reduction account debit to P&L to plant. Then you have to use this balancing figure. Even if the like goodwill amount will be like 10 lakh, even if in the balance sheet the goodwill amount is 10 lakh, then after this also you have to do write off only 1,67,250. Okay, don't get confused here. Okay, you will lose your marks. And another, if the taxation liability to be settled at 50,000, in which provision for taxation for 10,000, Understand. The taxation liability you have to, sorry, 42,000. The taxation liability to be settled at 50,000. Taxation liability we have to pay to the income tax department, that is 50,000. But how much provision we had created? We had estimated that only 42,000 tax liability will be in this year. How much? There is difference of 8,000. We are paying 8,000 more. Then if you are paying any reparation more like 8,000, then how will you will do the entry? Provision for taxes account debit 42,000 and capital reduction account debit to 8,000. This difference. Provision, because earlier we have already pre-created the provision to pay this liability for taxation for 2,000 and capital reduction account debit 8,000. So this entered to liability for taxation 50,000. And one important note: while you are making the balance sheet, you have to use the word and reduce while making balance sheet after internal reconstruction. Otherwise, you will lose 1 or 2 marks for presentation, because I say it's directing to many marks in answer presenting. So you don't have to lose these 2 marks. Even after you are correcting all the answer, you will score only 12 out of 40 because of this word. So balance sheet and reduce, you have to represent your balance sheet like this after internal reconstruction. Okay, I hope it will be so helpful for you. Thank you so much. I had covered all important adjustments and all entries of internal reconstruction. Thank you so much, guys. You will score 14 out of 14 marks in your May 2026 exam. Thank you so much, and do like, share, and comment how this video is helpful to you.